Back to our market watcher, Wayne McCurrie from RMB Asset Management. Thank you so much, Wayne. Lots of demands coming through in South Africa. Absolutely. Strike season, and we keep talking about the inflation scenario. We've actually alluded to the fact that the interest rates in South Africa could remain flat until next year. When you do see wage demands of this nature, are you concerned?
Look, you used to see wage demands of 25% when inflation was 6. At least you're seeing them now at 11% with inflation at 6. So things are getting better. But this is just negotiations and politics. You know, someone will the bosses will start at 4, the workers want 14. You'll meet at 7, 8, 9. We're somewhere around there. I don't think you're going to be many people getting double-digit this year. I really don't.
Gold is coming under significant pressure. Yes. It's reflected in the resource space. Harmony down 4%, Goldfields down 3%. Opportunity to buy, or do you think that we're starting to see a sharp correction in gold? We debated
this extensively internally, literally yesterday. And when you look at the rand price of gold and you look at the gold index, you say to yourself, am I stupid not to buy this?
Yeah.
But when you look at the rand gold price and you adjust it for the increase in the cost of mining, in fact, the gold shares don't look terribly cheap at this level. And in fact, the effective rand price, because of the increase in costs, it's actually gone sideways for 6 years in South Africa because costs are going up as quickly as what the rand price of gold is going up. So the index 7 years ago was 2,500. The index now is 2,500, 2,400.
And we've heard this rhetoric before from investors that there is no hope for South African gold miners because of the cost.
No, it's not the cost. Okay. The grades are going down,
deeper,
and where it is, it's deeper.
More dangerous.
It's not as though the guys are lying around the place, you know, wasting money. That is just a fact. Yeah. The gold is 3 kilometers down, and you used to get grades 4 times higher than this. I mean, I can remember as a youngster, and this is a long time ago, as a youngster in the investment field, South Africa used to produce 650 tons a year. We're producing 190 tons a year.
Yeah. Dropping dramatically. I mean, looking at the PMI number as well today, it's slightly softer, but we're actually above what we see on the global level. So we're actually in a good position.
There's nothing to worry about there.
With regards to some of the biggest plays for the JSE going forward, and you mentioned earlier that you're sounding like a broken record, and I apologize for sounding like a broken record again. Second half of the year, is it time to rebalance portfolios? Are you going to be downgrading your equity exposure? What are you going to be doing going forward?
No. We're sitting on our hands at the moment. We are just sitting. The next direction, the next thing we do must be dictated to us. It'll either be dictated by the market falling 15 where we'll buy, or the market going up 15 and we'll sell. Or our view of the world's economy changes for some reason, will either trigger a buy or sell. We are doing nothing. We're sitting.
And very, very quickly on the commodity space, and purely because we have seen resources coming under significant pressure, do you think it can be linked to the fact that QE came to an end yesterday? Because we know that there has been a very strong correlation between the two.
Yeah, look, I mean, I don't place that much emphasis on quantitative easing. Zero interest rates to me are significantly more important than quantitative easing. To me, resources are coming under pressure because China looks as though there's a possibility it could wobble. That's why we're seeing resources under pressure.